Hello everyone, I hope you guys are having a great weekend. This is Mickey here. I'm just going to be doing a bit of analysis on the S&P 500 and a few stocks that a lot of people are trading. So right now you can see that we had a bit of a down day on Friday with a good amount of volume. A lot of this was option X, 111 million shares. I'm going to go a little bit more in depth than yesterday's market recap. Yesterday was a pretty much a little bit of a rush day. So I'll probably be covering a little bit more and expanding on what I think that's going to be coming in the coming weeks, leading into October and the later half of September. So right now, this week was option X, pretty much a neutral week. You want to stay neutral. You don't really want to do too many trades because they're going to be pushing stocks up and down depending on where they're placed in the market. So stocks are, in the stratosphere are going to start to come back down, and stocks that are all beaten down, extremely oversold, I could get big bounces, right? So looking at the larger time frames here, we'll start off with the S&P 500. Again, I still think that this is our primary count, a B wave rally here, and then it's going to be leading on into a lot of people thinking that this is a new bull market and that we could potentially head up to new all-time highs, which is a possibility because right now, looking at the weekly time frame, we still have really good green money flow on the S&P 500, and it's coming up here. Your wave 5 would be right around 505, and then leading into 605 if you're gonna do a 1.618 extension there. But again, I think that the more likely scenario is that we are going to start to come down here, but it doesn't mean that we are going to 100% break the lows. This weekly time frame that you're seeing, it's right now showing that it's a bottom in the wave 4. If you're playing the bearish case, it's that nothing is going to hold and that the whole market is going to start to implode, and that the 420 level is not going to hold, and we're going to go to new lows, and we're going to take out the October lows of 2022. But the bullish case is that this wave 4 here that we've been it's been signaling that it's the bottom is going to fail, and it's actually going to extend further, and your wave 4 is actually going to come back down here to maybe around 400 to 420, and then you can play, if you're really risk on and you're really bullish, you're going to want to be buying here at these levels, and then you're going to play the long side, and it's going to come up into new all-time highs after that, right? So again, that's if the market that gets defended and the sentiment changes. A lot of people are going to be very bullish once that happens, right? So again, I'll just reiterate it for you guys. So that's your 1, 2, 3, and then the 4 can come down a little bit lower, and then you can go into your 5th wave, right? So that's basically what I'm seeing here, and hopefully you guys see it too, and hopefully it helps, right? So again, I don't think that this wave is just bottoming just yet. And again, I'll reiterate why I think that. So right now, looking at what the price action is doing, it's kind of forming lower highs at the moment. You got your first pivot high. This is your top, and then you made a lower high, and then you just made another lower high here at 450. If this level starts to break 440 and you start to come back down to 430, that, in my opinion, you're most likely going to break it, as green money flow is starting to decrease pretty dramatically here. And looking at the 4-hour time frame, you have now entered red money flow, which is really not what you want to see, if you're looking to buy this here and it's going to start mooning, right? Although anything can happen and it can do that, but that's why we use our market cipher to sort of give us an indication of what's going to happen. And so again, that's why I think you're probably going to start to come back down here. And then looking at the daily, so again, Wave Edge is designed solely for Bitcoin, but you can use it on the larger time frames to kind of give you an indication of where the trend is going in the stock market as well, by running it through the ETFs like the SPY. So looking at the monthly right now, so the monthly actually had a red cross in August, and I mean, ever since then, it's been kind of like starting to top out here. And again, you've seen significant selling at the highs on the monthly time frame. Again, this is monthly, right? So it's a really large time frame. You don't really want to be trading this. You just want to be using this to identify your trends, unless you trade every once a year, and you then that's your go-to, right? Look at your account, and that's fine. And then if we look at the weekly, we've been getting some red crosses here, which are potential short positions in the market, right? You can see that these two right here, this one played out, but this one didn't play out that well, because after the March crash, that's when the liquidity was injected into the market, and we've been going up ever since. Now we're getting a couple of red crosses once again. Those are playing out, and then the lowest time frame that would probably go to is maybe like the daily time frame. And right now on the daily, you're getting some selling pressure at the highs. You saw the accumulation, the buying at the lows of October, and everyone was really bearish probably at this point. I was also as well, and you could see that that's when they were accumulating, and then the S&P 500 has gone up 30% since then. But now they are starting to unload onto the market. You're seeing a record amount of selling by whales. So this is whales buying and selling. Sorry, buying and then selling. You can see, like, if you take a look at stocks that are high in the sky, like Eli Lilly, have been seeing a non-stop insider selling since then. I think they're up to $680 million or more now, because I posted a report the other day saying that the Eli Lilly is just being unloaded by insiders right now. And if we take a look at a lot of other stocks, let's just take a look at Nvidia, because Nvidia is like the darling of the AI sector right now. They have also seen a non-stop insider selling, and they're actually getting the CEO is unloading at the highs here once again. And the bulls will tell you it's just for tax purposes, this and that, and so that they don't pay taxes. But again, it's selling, right? It's selling regardless of what it is. The news, it's selling, right? And the insiders, they sell at the highs, right? They sell at the highs, and they'll buy at the lows, right? So again, the insiders will buy at the lows, and they'll sell at the highs, and then they'll tell you the narrative is always like, oh, there's always a good reason for it. But regardless of what happens, price action will determine what's going on there. Right now, you're seeing a lot of bearish divergence starting to form on Nvidia, right? From this RSI here going all the way down, you've had a massive, bearish divergence form, and even on the weekly time frame, you've had the same thing. You had your high here, and then a mega bearish divergence here, a significantly lower high on the weekly, and then you're seeing again a huge amount of insider selling on the weekly time frame. So again, this tells me that Nvidia is most likely going to start to come down here, and it's gonna be pretty shocking to the whole market of how low and how fast these types of stocks, these stocks that are darlings, the AI this, AI that, how fast it can come down, right? So again, I'm not hating on any of these companies. It's just they're just looking at the price right now and the pattern. I think this is going to play out. And looking at sorry, let me just get back on track here. Let's get back to the tech sector, because that's essentially what we're looking at now. So we'll take a look at the QQQs. So again, the Qs made a lower high as well. It looks like it broke this upsloping trend line on the RSI. And looking at the weekly time frame, so I'll go to the bigger time frames as well, like the triple Qs. So the triple Qs also indicating that we could make a higher high in the market. Not sure if it runs through all the other sectors as well. So yeah, it's pretty much the same thing, indicating that the monthly, the RSI, sorry, not the RSI, the Elliott wave is we're going to extend to a nominal high here at 420 on the triple Qs, which is again a possibility. But right now I'm seeing a lot of momentum lost on the dual band strength index, and looking at the weekly time frame, something very similar as well. We're starting to lose a lot of momentum. It's starting to chop sideways. And looking at the daily time frame, it looks like it's starting to it looks like that the Elliott wave indicator is finally starting to pick up on things. You can see that we are starting to form a B wave top here, and I think it's going to extend down into the 420 to not 420, the 340 to 320 area. So that's probably going to bring the S&P 500 right around that 420 area, where I think there's going to be some support, and the market could be defended, right? There's no guarantees. If it's just a straight crash, then the market will not be defended, and you're going to hit a lot of circuit breakers, right? But again, anything can happen. Looking at the daily time frame, we'll start off with the larger time frame. So again, a triple Q, something very similar to the SPY. We got a red cross in the month of August, and again, we'll see if this plays out. But this is just a really large time frame, and sometimes they can go higher and lower, like these green crosses. You can see the triple Qs. We got a green cross here, but the price went lower before getting another green cross and going higher. So looking at the weekly, so the weekly tells me a lot here. So you can see that there has been a huge amount of insider selling pressure. The dark pools, all that stuff. They're unloading at the highs here. Not surprised. They were accumulating at the lows as per usual. Taking a look at the daily, you can see they were buying at the lows again, and now they're selling on their way up. They've unloaded a little bit here. I know we're getting a bunch of daily red crosses, but other than that, the S&P and the QQQs, they're pretty much the same thing. Although the Qs may be a little bit more volatile because they have more tech than the S&P, but the S&P has so much tech in it as well. And then we'll cover the IWM. So the IWM right now, it's in a bit of a pickle because if it's looking quite bearish in my opinion, because if you start to break the 180 level here, then you're gonna see the price is may start to waterfall down pretty quickly, and there's a lot of regional banks inside the the Russell 2000, and the financials right now, make no mistake, because we are in a financial crisis, right? They've just been providing liquidity to the banks so that they don't fail. But right now, when that liquidity dries up, you're going to see that a lot of these banks are going to continue their trend towards the downside. And that's what we've been starting to see on like First Horizon, PacWest, and a lot of these other banks. They're starting to, run into resistance right around their moving averages, which are starting to slope down, right? So if these start to go down, then you're going to see the whole market will start to go down as well. And so we'll get back up to here on the triple Qs. The IWM, and I'll run the IWM through Market Cipher, which is going to be an interesting one because right now the IWM is very close to hitting that zero line on the money flow, and if it flips to red, it's going to be extremely bearish. I don't even think the IWM has ever been in red money flow. Maybe if we check the Russell 2000, there we go. No, it's never been in the red money flow. But again, these small cap stocks are really just absolute garbage. That are the money losing companies in the high interest rate environment. They're just going to do very poorly. So again, looking at the weekly here, there's no pattern being displayed here, but I think that pretty much it's going to be a C wave extension towards the downside. You actually got a red cross here on the weekly and a 15 and a -5. So that's very bearish. We'll have to see if next week we start to break the lows with the FOMC meeting. And just looking at the daily time frame, you're actually falling into red money flow at the moment. You had a nice little green dot signaling a potential bounce, and you can see that that was invalidated with another red dot here today with more downside. So again, if you were long here, you should have been stopped out, or you should have got out of your long position, because this could go significantly lower and lead to a bigger fall in the market. And looking at like the smaller time frames, like the 4-hour, you can see that we're in some deep red money flow right now. So I don't really like to see that happening. I'll like to long if the red money flow starts to recover. And then looking at the IWM on the daily, the monthly time frame, I don't see any significant red crosses here. We actually had a couple green crosses, and it actually led to a good amount of upside. And we'll have to follow through. We'll have to see the market keep going higher if this is going to keep going higher, right? We need the S&P and the triple Qs to go higher, because if you think that the S&P is going to drop down to like the 420s, and you think that the IWM is going to stay here and maybe even keep going higher, then you're mistaken. You're going to see that the IWM is going to come back down in a very dramatic way as well, right? Okay. I'll move on and I'll take a look at the weekly. So the weekly actually got a red cross right around the highs as well, and it's been we've been falling ever since, and I don't think that it's over just yet. MACD is actually already crossing into the negative momentum here. So you're gonna see that everything is looking quite bad for the Russell 2000, and then the daily time frame as well. I'm not seeing that much insider selling at the moment, but yeah, I mean, we saw some accumulation at the lows and that nice rally up. And then finally, we'll wrap it up with the Dow Jones. So the Dow Jones is at support right now at this upsloping trend line. If that starts to break, then I think you're going to be in a heap of trouble. And looking at the weekly, you haven't broken it. You haven't broken the RSI trend line, but I do expect it to start to break. Once you probably tag 335 on the diamond, you'll start to come back down. You'll find support, but you'll break the upsloping trend. You maybe get a bounce and retest it as resistance, and then start to come back down again. And then looking at the Dow Jones on the monthly time frame, and again, this one is the same thing as the S&P. It's a B wave top, and you're gonna start to come back down in the coming months. Just a lot of repetition, right? Because it's all the same. And then weekly time frame, you got a red dot here. You saw that the momentum was really starting to decrease as well. Red dot on market cipher B as market cipher A, and again option X, so a pretty neutral week here. But on the daily, it was looking pretty grim. With these big these big blue trend reversal signs, and then that played out perfectly, and you saw that the Dow Jones has been reversing ever since, and it's unable to break above or past this previous resistance right here. Okay, so if the Dow Jones starts to head lower, that's going to be very bad for the markets as well. And looking at the 4-hour, you're already into so much red money flow. I expect that it will continue and probably start to expand as the price goes lower. And then I'll finally wrap it up with the Dow Jones, maybe, on the monthly time frame. I'll just look at the diamonds here. Nothing I really see. Not that many people trade the diamonds and stuff like that. Everyone kind of focuses on the SPY and the triple Qs. And with the weekly, you got your red cross, and the daily, you got a lot of insider selling at the highs. Once again, not too surprising. It's all the same stuff. And then I'll probably take a look at a couple of stocks for you guys. So Nvidia, I think we talked about Nvidia, but I want to talk maybe about another one. Maybe we'll talk about Apple, because a lot of people are really bullish on Apple here. Because Apple's the darling, right? It's your go-to safe stock. Everyone parks their money there. It's never gonna go down. It's a solid company. They're always gonna sell phones. But you're getting all this, bad news about, all the semiconductors reduction in demand, which is a fact, right? You're gonna see it in their earnings, and probably the next earnings that are coming up in October. That's gonna be pretty shocking to the market if we're able to beat the previous earnings, right? And I think it's going to be pretty shocking. We're going to go from bad to worse, in my opinion. That's just my opinion. That's just pure speculation. But looking at the chart, you saw that Apple was trying to come back up and fill this gap here at 190, which was pretty surprising that it was unable to. And you're seeing that Apple came back down and a pretty big drop here. And I think you're just consolidating before your next leg lower, and you're going to start to head back down towards 160 to 158 is when I'm going to be maybe looking to chance along with Apple. If it does not hold there, it's very possible you're going to come back down and maybe come back down to $110 to $90 on Apple. And again, I know it seems so improbable that Apple will do that, but you'll be surprised, what markets can do when it's straight up panic. And look, I'll just cover Apple maybe on market cipher. Maybe we'll find something that I'm not seeing. And again, I usually like to focus. There you go. So on Apple, you got your B wave top there. Essentially what I was saying. And you're going to come back down in a C wave down to 160 to 158 is where I'm looking. But it's showing that it could extend even further down to the 1.618, right around 145. And you can see that there's been a good amount of green money flow reduction, and that's not what you really want to see. But you could form a nice little bullish divergence here, and that's what I was saying. So if you come back down to 160 and you make a lower low, but you make a higher low in the momentum, then you have a nice little bullish divergence, and that's when you want to take a chance to maybe long the bounce. And then it could, if you cut back into the red money flow, that's probably when you want to exit and take a short position, because it's going to continue down, and then you're going to see the price is going to start to come back down as well. So again, that's how you trade with market cipher. You just want to look at the money flow and the momentum and all that stuff. Anyways, I think I'll wrap it up here. I think I talked long enough. And if you guys enjoyed this video, Feel free to like and subscribe and sign up to the free YouTube channel for Hedgeline Trading. That's where I do all my stock market analysis. And if you guys trade crypto and Bitcoin, stuff like that, I have my main channel. I'll be posting it in the description as well, so you guys can check that out too. All right, you guys have a wonderful day. Peace.